Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Equity markets are at record highs and there's plenty of excitement among investors. The big question on everyone's mind is whether this dream run is going to continue. And more importantly, how do you need to plan your investments looking at the current market dynamics? Well, this week, Mr. A. BALASUBRAMANIan, CEO of BIRLA Sun Life Asset Management Company, joins me on the show to give us some perspective on what to do with your mutual fund investments in these very interesting times. Sir, always a pleasure to have you back on Money, Money, Money. And since the time we last spoke, almost 6 months back, I mean, equity markets have moved to a completely new paradigm. What have you thought of or made of the market rally? And I mean, how do you just look at the current levels where we are at?
Whatever we are seeing in the market, it is nothing but endorsement of the positive outlook that keeps emerging on India. So that's, I think, primary reason. And second is, wherever we felt in the last 6 months or 1 year, that things are not going in the right direction, including the last show when I was there, post-demonetization in the month of December, I still remember. Yes. There's a lot of uncertainties, question marks were being raised.
Correct.
And since then we have seen the market doing better at every level. Even now, having reached the new high, still some of the expectations on the market, especially I'm talking about longer term perspectives. The fundamental change that is coming in the form of GST, I think the way I see is so much of preparation has gone behind making it as a grand success, implemented successfully. My gut feeling is that maybe it could probably turn out to be the same as what happened in case of demonetizations. Perceptions are bad, but I think implementation is so great. I think things will get, may not get worse as what generally is perceived to be. Second is, of course, the whole monsoon, the impact. And then your own show, they are saying, I think the monsoon has arrived 2 days early. Yes. So that essentially means good for rural India. I think in a holistic basis, if we look at India, I think fundamentally we are getting better and better each day and each month, which essentially means from a market point of view, though one can put a question mark that market has touched a new high and the valuation is right and so on and so forth, I think the probability of the earnings of companies outperforming the expectation of analysts, I think it still remains high. As long as that remains, optimistic outlook remains, I think Indian market will continue to do better. Need not necessarily it has to give you every year 20% return, but as long as it's slow and steady with the least amount of volatility, I think equity market should do well.
Do you see any risks on the horizon, or is it a Goldilocks scenario, as they say?
Of course, the risk is always there. I think the risk amount which we have been now saying of late is around the geopolitical risk, which has been one of the new emerging risks. Not that the risk was not there. Risk was there and it got tapered off quite a lot in between. That's something which is there. Anything that comes in the global market, it could potentially have an impact on the equity market.
But domestic, when you're looking at earnings, when you're looking at this whole question of NPAs and whether banks can handle all the stress, domestically, is there anything that right now perhaps the market is ignoring because of the strength of flows or, just the gush of excitement?
I don't see too much of risk that exists as far as in India concerned. I think some of the risks that you mentioned about, I always look at it from this angle. Either risk is a known risk or risk is an unknown risk. As long as the risk is known and it's now out in the public and that there is it is no more a secret, then it is not a risk in my view. And the NPAs is one issue which is now it's there out in the public. Essentially means one has to find a resolution.
But if we assume that all of this works out well to the favor of all the people who are bullish,
correct,
then what do you say? I mean, how much more would you give this market rally? Another 5%, 3%? I mean, or do you think we'll get into a consolidation period in the market?
On the basis of my own experience, one should see is one, slow and steady kind of growth that I think one should expect from equity market. Second, I also look at, given the fact that the mutual funds have been playing a very important role as a stabilizing market agent, I call it, because of the thanks to the large flow of retail participation that come in the mutual fund space in the last few years, and that trend continues. Therefore, domestic investment flow into the equity market at a very low level could actually be a strong force to look for. And that's being the case. The volatility, whenever we see, I think we'll see the volatility being the least as far as our market concerned.
So those who are waiting for that dip to come in, they can just keep waiting.
Of course, yes. But that's why I always keep saying that one of the big thing, which is my own experience, as an investor's behavior, I always noticed and seen, is when the market is down, you wait for the market to fall further. If the market goes up, you wait for the market to come down. And both the side, I think the one decision remain constant and common is actually not investing. And that seems to be changing gradually.
Yeah, that's exactly what I want to talk to you about now. Of course, AMFI started, I believe, a campaign in March, and mutual funds are now, asset management houses are setting aside a small portion of their total assets under management to invest in these activities, to educate people more. What has changed? Because the flows, as you mentioned, are so robust.
I think one or two fundamental change that has happened for good for the MF industry. There is an alignment. I think across MF industry's players, they talk one language, which essentially means, yes, one has to invest in equity, but don't invest in one go, but invest in actually over time, which is an SAP. So now SAP has now become an accepted terminology among the investing public, whether it is a small investors, medium investors, or HNIs, or big investors. Now they have started recognizing the best way to build portfolios through SAP. And that, in my view, has come, one, because the collective voice coming from all MF industry players. You will never find any disconnect coming from one player or other player when it comes to the question of talking about the SAP as an asset class. That's something is a big achievement, I would say, its industry has achieved.
I looked at some data for FY17 and the figures are mind-boggling. I mean, you've got total assets under management for the industry as a whole crossing, what, 18.6 lakh crores? That's a growth of almost 37%.
Yes.
And I believe a lot of money, retail money, is coming in also from states like Chhattisgarh, from Bihar, from some of the northeast states. So these are new trends, right?
Yeah, the land prices have not just gone up only in metros. Land prices have gone up across the country. Especially in agricultural land, if you take the wealth effect arising on account of agricultural land going up in terms of price is spread across the country. All the mutual fund players, including the distributors, are made to actually reach out to these small markets and create an awareness, which I think the industry has been doing it.
That's the really important question as well, right? Whether people in tier 2, tier 3 cities are also aware of the risks that come with equity, that it can get volatile. There can be periods where, you might see a bit of your capital get eroded, and you need to have that patience and the buffer to ride through that.
So one other thing which you have analyzed is the money that is coming from the BFD market. The holding period, there is one number which I always look at. The holding period actually goes till about 7 years in equity.
Oh, fabulous.
Whereas if I take actually the metros,
people will want to churn very quickly.
Exactly. I think the holding period in metros could be, say, about 3.5 to 4 years. When I compare that, actually, the holding period in equity investing, especially the BFD market, goes up as about 5 years, 7 years at times.
Well, some fantastic trends there to get to set the ball rolling, so to speak. We're going to take a very quick break, but on the other side, sir, this is money, money, money. The question that we need to ask you is the kind of funds we need to put our money in right now, and that's exactly what we will discuss after this short break.